Good morning, everybody. Welcome back to the Schwab YouTube coaching channel for the Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you from a beautiful, as always, Denver, Colorado. Today, very pleased to be joined by my friend, Mr. Ray Kimbrell. We just got done spending the weekend together out in San Diego, hosting a live event. Ray, always good to see you, even on the heels of spending so much time with you here this weekend, buddy. How you doing?
Yeah, and I'm doing great, and it's another beautiful day here in Lewisville, Texas, and great to be here with you, Kevin, of course, and even after a long weekend with you.
I'll tell you what, one of the great things about doing these in-person events is we get a lot of time together, obviously, and
Yep.
being on stage together or going to dinner together or what have you is a great time for all of us. But it's a wonderful reminder that we are out there trying to find as many of you as we can through the live events, through the in-person events. Remember, everybody, to check in on those opportunities to join us for these. We would love to see you at some of them in the future. We're going to talk a little bit at the very end of the session about what's coming up this week. Ray will be hosting a class this evening, beginning this evening and the rest of this week, regarding options and getting people familiar with that. So we'll remind you of how to find that. Today we're also joined by Brent Moores in the chat, fellow coach, good friend. Brent will get to comments and questions that Ray and I are unable to, but we're going to keep an eye on things nonetheless. Make sure you're following the three of us on X. We're all available there. And if this conversation is helpful for all of you as we try to set the table for you this week, please give us that thumbs up down below. That'll help us when we get this reviewed and into the archive here going forward shortly after the completion. So with that, let us jump to our disclosures so that we can get straight to the chart. So first of all, remember, everything we cover for you today should be considered informational and educational exclusively. We do not make recommendations nor any endorsements for a specific approach to trading the market here. What we will do is incorporate technical analysis concepts and strategies as we review the areas of the market with all of you. So you'll hear some ideas that you may choose to incorporate. Please consider these just that, ideas and potential ways that you can address the market. But from technical analysis standpoint, remember that this is just one of your decision-making puzzle pieces, not the entirety of it. All right, now in terms of an agenda, as always, we remind you that we follow a top-down approach here, and it looks like my slide has gone dark. So essentially our agenda is to work through the major indices. So we'll start with the S&P 500. We'll work into the NASDAQ 100, the Russell 2000, probably semiconductors, and a few other key areas of the market, sectors, probably look a little at oil. But there's been a lot of change here, Ray. I think Friday really kind of put us on tilt a little bit. We had one of those big significant pullbacks. And as you can see on this chart, that candle, it's one of those candles, Ray, not only does it break a significant moving average, in this case the 20-day, but it's one of those where you look at it and say, boy, we haven't seen a candle that deep red in quite a while.
Now, if you look back on that chart, folks, all the way back to March, where you made the V,
Yeah.
yeah, there's not one. You got the big green one there, and that's about it. That's probably one of the largest ones in a while.
Mm-hmm.
The gap up this morning, kind of, we talked about that over the weekend, you and I know, as we got into this. So we'll see how that progresses. I know we had a few chats already in the morning about, how's this news pressured market and how that relates, and with the so-called ceasefire with Israel and Iran. We'll
Mm-hmm.
see what's going to go home there. But yeah, a little positive pop there this morning with the gap up, but we'll see how it's going to trend out.
Yeah, and you mentioned it. News broke this early this morning that Iran has announced the end of military operations against Israel, according to CNBC, with very limited information about it.
Yeah.
And yet, again, Ray, obviously we've been hearing the same stuff for a long time. In the last 10 weeks, all of those headlines weren't providing market movement. They were just part and parcel on the side over here, right? And we weren't really paying much attention. And I find, Ray, when we get this bouts of weakness, we tend to want something to hang a reason on, right? We look for a reason for it. Sometimes there's not a good reason. It's just, hey, the market needed this, or there were a number of key details that came together that led to the significant action we got. And then, Ray, sometimes it's just we fell through a level and
Yeah.
algorithms went to work.
Yeah. I mean, if you look at that the candle on Friday, you went right down to that level of support, really,
Yeah.
um, running on that 70, what, 73.50-ish
Yeah,
range.
73.50, 73.60.
Yeah. And so, that tends to hold well a lot with a lot of technicals we look at when you look at support and resistance. Um, that breaking that 20-day moving average is an eye opener, obviously.
Mm-hmm.
But look at that level of support held good, held strong.
Well, yeah, we'll see if it maintains.
Yeah.
And of course, as always, we look for things that are a little different. So one of the things that we can carry, Ray, from a SPX look to an NDX and a Russell is going to be the fact that we're below the 20-day. We talk about that briefly, but why is it significant? Well, more than anything, it's significant because we haven't tested it prior to Friday, right? We hadn't even seen it as a
Right.
test since we broke out here on April 7. And the other thing is time frame, Ray. Have you pay attention to the length of these rallies? I mean, if we look at when we really recaptured it, it was April 6. And if I draw the line to Friday, basically that is 44 bars, 9 weeks in length. Now, Ray, I'm always thinking about it from a standpoint of 6 to 8 weeks for trend analysis, right? For a rally to go, and then maybe 6 to 8 weeks of pullbacks can be the time frame as well. Does that fall into your time frame or consideration when you're looking at trends like this also?
Yeah, I look at that, and I also look at. I know you got the 20 on there, but if you look at the 10-day as well, moving average,
Mm-hmm.
and you look how is it following along that little quicker time frame, and you can see how that's holding a very good strong level of support as it goes um, vertical,
Mm-hmm.
diagonal, I should say. Sorry, and look at that break.
Yeah.
That tends to that opens my eyes a little bit more at times when you use the 10. But that doesn't say that it's the kiss of death, if anything. It's just
Sure.
one of the data points that I look at. But yeah, I kind of hold the same thing. I think that it shows you some of the weakness or some of the concern as people as traders look at the market in the news and how's price reacting.
So let's do one other thing here before we jump off of the SPX in favor of the NDX. I wanted to do a Fibonacci move just from the lows to see if we could equate the level to which we fell with anything of significance. And interestingly enough, the 23% resides right beneath us. Now, that doesn't mean that the low. Oh, looks like my battery is running low, folks. I'm going to
Yeah,
need to make sure that I get that stinker plugged in, so I'll have to apologize. I'll make sure I get that done. But interestingly here, Ray, looking at this at the 23%, this kind of could still be tested over the course of the coming hours or
yeah.
days, even still.
Exactly. And as everybody knows by attending of our technical classes, that support is an area, not necessarily a exact price point, and that the support level that you drew in there is right at that area um near the oh Kevin, you unplugged everything, I think, but right near that level of support. So hopefully that's gonna hold steady for those that are more bullish on the market and want to see that area to maintain.
All right, everybody, thank you so much for your patience. I got the dreaded blue screen of death and was able to get that fixed up incredibly quickly. That might be my fastest reload ever, Ray. Listen, we were just talking about the standard nature of our pullbacks, right? And we see so far we've seen this to be nothing more than that. And I know that from a trend standpoint, when we change our supporting moving average, in this case the 20-day, trading below it, some of us will get a little more defensive. Some of us would look for this as trading opportunity, maybe even entry into those areas. But I wanted to, more than anything, Ray, put a little perspective on things. And yes, we've had some strength that's allowed us to hold those very short-term moving averages, and yet we haven't really done much
Yeah.
to alter the longer range trend here. So, Ray, was there anything else you wanted to make sure we covered as it relates to the SPX specifically?
No, I think we covered it well. I was just saying right before the blue screen of uh-oh came up on you that that 23 level retracement and the support level. You got to remember for support resistance areas. So I mean that coincides nicely with that retracement level, and
Hmm.
it's reacting to that right now. So we'll see how that maintains.
Yeah, and that's exactly what we're looking for. And of course, the challenge I think that many of us face, Ray, when we look as we move over to the NDX here, I think the challenge that we face is applying these details after the fact. So we're in
Yeah.
the midst of a pullback now, right? And so now we start applying these areas that we think could be supportive. It almost feels like we are leaning into our bias a little bit. This is actually why I think it's so important for us to think about this stuff in the midst of our rallies to the upside so that days like Friday don't leave us with our hands in the air saying, now what do I do?
Exactly. It's like I was back when I was on active duty many years ago,
Hmm.
and a brand new lieutenant, you always get the proverbial "What now, Lieutenant?" Right? And and so that's the kind of the reaction I kind of feel sometimes when you get this. But yeah, it's kind of interesting also, Kevin. You got that intermediate level of support, old resistance level drawn right there where the 20-day moving average kicks in, and we're
Yep.
pretty close to that where it bounced down. Yeah, it bounced a little below that, but it's hanging in that area. And again, as you know, it's an area. It's not an exact price point. That's kind of an interesting uh, pullback level or gap up, maybe this morning, I should say,
Hmm.
to that range.
Yeah, it's always hard when we have a candle the size of Friday's, Ray, because there's the next directional move for so many traders is through the high we made on Friday or through the low we made on
Yep.
Friday. And that is such a wide berth that you don't, and we're right in the middle of it all. So
Yeah.
trying to define the next move, the next directional opportunity becomes increasingly more difficult. So it's much more difficult to manage, if you ask me, especially when we're in the middle of this all, right?
Yeah.
So the next thing might be let's go ahead and look at it on maybe a 15-minute bar, see if we could see anything in here. And granted, it's still too early in the day, but if nothing else, Ray, one of the things that a lot of traders look at, that 20 period exponential moving average, that's this white line I've drawn in, and it can be a trend following level on an intraday chart, whether you're using 5-minute bars, 15-minute
Yeah.
bars, hourly bars. But it's for some traders a way to manage shorter term trends. We are back above it here intraday.
Yep. And it's starting to kick up, turn up a little bit at the very start of the day, the morning here.
Yeah.
Um, so yeah, that's and, I think one of the cautions maybe, Kevin, to put out to people out there is like, we always hear it in the workshops, and the perma bears or the perma bulls, and you hear this comment like, it's got to pull back, it's got to go down, and like, no, it doesn't, or it has to go up,
Hmm.
no, it doesn't. And I think that's the dilemma that you're talking about is our own internal biases and what you want the market to go, or you think it's going to go, or maybe hope,
Hmm.
get in your way of calming down and looking at what you see and not what you hope, think, feel, want, that kind of thing.
It's the I think it's the hardest part about being a
Yeah,
trader,
I
right?
believe you're right.
Is trying to stay neutral to an extent. I mean, you can have a bias, but you also want to be practical in your approach to trading it, right?
Yeah,
That's the hardest part, I think, is to
I totally
balance
agree.
those
Totally
against
agree.
one another. So, okay, so we do have a little bounce here. The other thing, because we did it in the SPX, let's go ahead and just do a Fibonacci move and let's see if we've got any Fibonacci support. And I want to use, okay, now that's a little even
Wow.
more interesting, isn't it?
Yeah,
Boy, the selling on Friday on the NASDAQ 100 at least
right on it.
stopped at the 23% retracement. There's a few questions in the chat here, Ray, so I'm going to let you speak to this. You tell me, the questions are, which of these moving averages matters? Does that mean that now that we're under the 20 on the NDX and the SPX, does that mean we have to see the 50-day? Does that maybe mean horizontal support comes up first? How are you looking at this in terms of finding the next layer of potential support, an area for a bounce?
Yeah, I kind of like I do like using the Fibonacci's a little bit to help me gauge support and resistance levels at the same time. But I did what you did, Kevin, and folks. I draw in without the Fibonacci's first. I'll draw that support resistance that I see where we've had that price action going in, and I agree where Kevin has those drawn in right there. And then when it comes to the moving averages, um, I do like looking at the different levels. Over a faster one, a 10 or a 20, like Kevin has here, a 50, a 200, to
Hmm.
give you some range of more of a trend, intermediate, long-term, short-term trend ranges, um, and not necessarily use it as the main level of a support or resistance as it diagonal goes. Uh,
Okay.
and I'll look at both things to see where they kind of coincide. And that's why I kind of pointed out, Kevin, your 20-day moving average and that level of support resistance right there around that 29, 455,
Yeah.
right in that, right, yeah, that range right there. And so I like when I see that, I go that may tend me to think, could that be a heavier or more stronger level of this case of support? It kind of broke down to that, but it's right at it. Again,
Hmm.
remember, it's a broad brush, folks.
Yeah.
Don't get hung up that just because it broke, and that's a large number. That's 29,572. Okay, it's not like you're looking at a $200 stock right there. Okay,
Right.
so when you look at that range right there, that's as they say, it's close. All right, hand grenades, horseshoes, that kind of thing.
Yes, exactly.
And
Yeah,
so
we can't be too fine, is what you're saying.
yeah,
So one of the final things I'll mention, and I'm going to kick us over to the Russell, but just a reminder to kind of answer the question broadly about which of these areas matters most. Is it that 20-day? Is it the 50-day? Is it horizontal support? The truth is, we don't know. Okay, we
yeah,
don't know where support will truly be found. So again, we say it all the time: technical analysis. It's far more an art than a science, which means that we all individually will find support differently, right? Some of you will prefer horizontal support versus trend support with a dynamic moving average. Some of you will be the inverse of that. But the best thing that I have learned about trend, locating trend and defining support and resistance is not to adhere to it like it's the only opportunity to see support. So give yourself multitude of levels, okay, both above and below you, and then decide specifically what can I sustain with my positions if we move through a level of support lower, which it will give you the greater likelihood of having more downside risk. And if if you have greater likelihood, if your probabilities are for lower prices, well, then how do you as a trader want to manage that? Do you
yeah.
want to stay comfortable as long as possible? Meaning, do you sell some as you get weakness into your portfolio, or do you use that as your reason to be a buyer? Right? Have these concepts and strategies kind of defined for how you like to address the market. And if we can get that stuff cleared up, kind of defining your process and who you are as a trader, it's going to make this management of your trend so much easier. It's going to take the pressure off to a certain extent, Ray, that you don't have to be right. That's the thing
No.
about trading. We're going to be wrong. We're going to make mistakes. How do we limit the pain from those mistakes, right? In the form of
Yeah.
our pocketbook.
And another thing looked at is like, Kevin uses he has a 20, 50, 200. All
Hmm.
right. Moving average going in there. I use a little quicker one. All right. I use a 10, 40, 200. Doesn't
Okay.
mean one is right or wrong. It shows different levels. And one of the things y'all might glean from that is try looking at both things. Look at maybe a quicker one, maybe a slower one. Like, Kevin, like if you saw the screen I have on my left, which is on my account,
Hmm.
and I have the 1040. And when you look at it, that big bar that dropped on Friday, it hit right exactly on the 40-day moving average, right?
Really?
Yep, exactly on it. And so, in that, so it doesn't mean that that's the right way to go. It just shows you that that quicker time frame is giving you a different level of support potentially
Hmm.
for where it's trading. Um, it doesn't mean that's the right way to go. It just gives you a different outlook at it. And
Yep.
so and I do the same thing. I actually have several sets made up already where I go back and forth and look at different ranges. so that I can get the same eye. And maybe that's something that the traders out there should do as well. If you're not doing that, just to give not to freak yourself out sometimes, going, oh no, it
Yeah.
broke this. Look at different levels, different timings.
It's the hardest thing to do. I'll tell you what, Ray. Friday, as difficult a market day as it was the best day for me to be doing something other than staring at my portfolio. I'll tell you what, being away, being forced into an educational standpoint, I'm up there in front of a monitor working through it and showing off Thinkorswim, talking market and talking
Yeah,
with attendees at our event. It made it a lot easier on me to just not even paying attention to it. What really, and so
yeah,
some days you just do need to step away from what you're seeing on the screen. Ray, the big move in the Russell on Friday was largely, as I saw it at least, and I'd love your thoughts on this, tied to the big spike we got in the 10-year. Everybody knows we've been talking about the this kind of island top and the 4.5% zone. We know back above 4.5 with the close on Friday. We've tested the 20-day with the yield move today. We're in an important spot, Ray. I don't think small caps would like to see us moving higher than the high we made on Friday, but I'd love your insight on that.
yeah. No, it's going to be if it moves higher than that. I'm trying to how can I put this without getting too much. um, that's one of the things that we saw in the small caps, and one of the big drops on Friday. He was like, "Oh my gosh, how's that going to react to that move up if we get in that higher range again?" Um, and I don't think they're gonna. That's not going to be a good view for them. It's gonna show some more of that pressure
Yeah.
um, for them down if it does move up into that area. Um, it's holding, that where you drew that level of resistance right there. I think is your line. I think
Yeah.
you got it nicely drawn in there, something to watch. Um, and I'm not that I don't want to agree just to agree with you, but I think you're on the money on that one, and we need to
Well,
watch it.
I know it would be a lot more entertaining for our viewers, Ray, if we could have a little, opposite view here at some point. But
There's some things you
I
can't do.
it's tough sometimes, right? Now we
Yeah,
can, Bill is pointing out high labor report on Friday led to that big move. He's absolutely right.
yeah,
A lot of the conversation around the health and strength of that jobs report, kind of pushing out the possibility of rate cuts. Prior to the jobs report, there was
yeah,
discussion that rate cuts could still be seen in 27, not 6, because the positioning of traders is not indicative of a expectation of cuts here between now and the end of the year, but rather I think there was a thought that we might see as many as 2 rate cuts in 2027, and then
yeah,
that kind of flipped pretty aggressively on Friday to the point where there could be as many as 2 rate hikes in 2027, according to the CME Fed tool. So positioning changing of expectation will have big swings in the market, and that's kind of what we got on Friday, I think. So
yeah,
that certainly bears watching, but ultimately the levels that we continue to trade around and get rejected at can be very instructive for us here.
yeah.
So 4.5 and maybe in the 4.5 and a half that we finished at on Friday, basically, if we get above that, things could look a little different here on the Russell 2000, the small caps going forward. So let's just continue to keep an eye on that. There was also a pretty interesting comment here from James about the rotation we've seen. We're going to look at the rotation a little bit because Friday was a hot day for all obviously a lot of tech sell off, right? But what went well on Friday were the laggers. We saw healthcare, we saw financials, we saw staples, utilities, and real estate doing far better. We'll talk about that rotation. James's point was being, hey, caution on your rotation because inevitably when we get those big moves, the speed of the selling it will take you to a level so quickly that it's going to entice traders to be interested in tech again, and you may find yourself completely trapped by being in something slower and defensive in nature. Right, big significant move here. Obviously, the semis took a pretty healthy pullback, but very important level. Ray, this is our leadership industry group, as we all know, I think, right? So,
Yeah.
what do you take from something like this where the 20-day was actually tested, yes, we were below it, but we are much closer and much more in trend, even still in the semis versus all the three major indices.
Yeah, I think it's still a powerful uh, industry to watch. I mean, right back up. Um, yeah, I don't see, from looking at the chart, gap right back up into that range. Um, that market, that whole industry is still just cranking.
Yeah.
Obviously, I mean, you can't sit there and go, it can't stay that way forever. The old adage is too high. It can't go any higher.
Yeah.
Well, yeah, it can. You know,
Yeah.
and it's showing you the strength and the power that it has. And there it is, right there, right in front of us.
So that's just it. The moves to the upside are big. The moves to the downside are big, but I think the takeaway that I'm adding in here is the speed of the pullback gives fear in the moment,
Mhm.
but if you're leaning into your price levels, you've got reason to think that this could easily have acted as support. You could have been a buyer on Friday at the close with enough preparation, certainly, Ray. I mean, these were
Yeah.
prior highs. We know prior highs, resistance, once broken, can become support. So now that we've bounced off of it, I think a lot of traders are going to say this is the level of short run support under which the odds increase for a deeper pullback. But this pullback is, let me make sure I
Look,
get the
yeah,
right line in here. Okay, let's define it, everybody. This pullback, as speedy as it was, only what, 3 sessions? Peak to trough there, 13%. So that's exactly the average or standard pullback that many traders want to see. So we'll see if it holds, but everything that I said about the SPX and the NDX still maintains, Ray. We don't know directionality much
no.
unless we trade through the high we made on Friday or the low we made on Friday, and then we'll have a little more clarity.
So look at that. If you could, Kevin, draw draw a support level in that gap. Um, right now, that current support level that it dropped down to.
Yep.
And then there's a right there.
So you're basically just giving it a nice wide range
Yeah,
that could all act as support. Is that what you're
there
getting
you
at?
go. And that's where it's trading at too. It gapped right up to that same level it did, back mid mid May or late May, I should say.
Mm-hmm.
Um, and then it's right back in that same range. And again, that same thing. Look at the candles. You got the one large Friday candle.
Mm-hmm.
You can't call it an anomaly. Well, maybe you could. I don't know. But look what it's doing right now. Already this morning, it's hitting that same type of action that it's been doing all along.
Mm-hmm. Yeah, we're going to get, and really, we shouldn't be shocked to see a bounce on a Monday following a horrible Friday.
Yeah.
Regardless of headlines and what have you, the common approach is, hey, let's see traders coming into the table and covering what they did on Friday. If they were aggressively, anticipating deep moves to the downside, today becomes an opportunity to take some of those off and see can the trend reassert or not. And so we're in decision mode or discovery mode here. If we go to the 5-minute bars, we'll notice again that we have gapped through the pivot point. So the pivot point in purple is your equilibrium price for the day, according to many traders. They're going to look at that based on Friday's price action. And now you're pulling back a little bit, but it does mean that any pullback that holds the pivot point and potentially the rising now 20 period exponential moving average on this chart, where you can see we were below it all day. And if you use that as your resistance, your dynamic resistance all day on Friday, this would have been a great way to manage your day. That's not going to work every day, as I hope you know, but
Yeah.
it could work this way going forward the other direction now, Ray, that we're back above it. So it could be an important way to monitor trend.
Yeah.
I see there's a request here for Rita. Let's get that the Fibonacci move from our low to our peak and see if that coincides. And we're all in the
Yep.
same thing here,
There
aren't
it
we,
is.
Ray?
Yep.
So not to say that it has to be support, but it could be support.
Yeah. I mean, it's excuse me. The last four charts we put up in a row, we put that in there. It was holding that area,
Mm-hmm.
and it identified. So again, it's not the magic magic wand, drawing the Fibonacci and thinking, oh, well, yeah, it can't go any lower. It's going to hit the 23. It's got to bounce. It
Exactly.
doesn't, but it has been lately. So it's a good thing to look for. So those who, if you are one of more of a trend swing trader, that more of a short term, maybe that's something that you watch if you haven't doing it, if you're not doing it now, and understand what it's telling you, um, and use it accordingly.
That's about all we can do, right?
Yeah,
And when we say accordingly to our comfort, to
that's
our
right.
process, right?
Yeah.
Leaning into the plan that we hope to set for ourselves. Now, Ray, we have to look at something that has kind of been a very clear market factor for the last 2+ months has been oil and the relationship of oil to that of the market. But Friday, it seemed like we got a little decoupling on that. So I'm going to bring up the futures symbol on oil. It's /CL. We're going to look at it briefly, not as a reflection of, or not as a reason for encouraging futures in any way, but rather just to understand trend here, Ray. But Ray, the thing that I've been monitoring most is this broken trend line, right? We had this strong uptrend from the beginning of the conflict. We went into a consolidation here where we were making lower highs and higher lows. And since we've broken the uptrend line, we haven't been back above it. In fact, we're using the 20-day, the 50-day, the trend line, all that confluence of value there at around $96 a barrel seems to be acting as resistance. And Friday, we had an excellent down move in oil, excellent for what we would think would be non-inflationary, helpful to the overall market picture. But oil went down on Friday as aggressively as the rest of the market did.
Yeah, and you know, the war notwithstanding, it. I mean, there's no big news coming in and out of there. Still the blockade. There's still no action as what could happen. So,
Mm-hmm.
and I don't, as you and I were talking, is that really? Is there other factors now influencing oil more so than just okay? What are we gonna do with the straits?
Yeah,
You know what I mean?
I
And
do.
and so consumption is it down overall because of the fear and people are not using it as much, or you're not hearing much on the reserves getting released. Um, so it's kind of odd, but it's kind of stabilizing. It seems like a little bit, yeah. If you think about it, because now, as you said, it broke that one level. It's below it and it's staying below it. And you know, if you continue your declining support level, it's staying right. It's staying along the line with that, and it's
Yeah,
gonna make a new. It's gonna make the new. And you got the crossover. You
yeah,
got your 20-day is now crossed down through the 50.
yep. So it doesn't. Okay, so maybe the reminder here, Ray, is we can have our narrative. We can think we know what the story is, and yet we can still be confused or completely shocked by
Yeah.
what we're seeing. Friday was that day for me. I would have expected that the selling in oil would have buoyed the market in some instances a little bit. It did not. So the clear scenario that I came to was the rally in tech needed profit taking. We needed to pull back regardless, and maybe we have more or less decoupled from the oil move. The other thing that's interesting to me, Ray, is that you know what? Transports have been foreshadowing that as well. Look at the entire transportation space here, right? Moving to, now granted, that big spike has something to do with, I believe that was still Avis, when we had that short squeeze in
Ah,
Avis in the
yeah.
transportation index
Yeah.
there. And yet, now we are back on trend here. This is a short term trend moving aggressively to the upside. And I think the falling of oil is absolutely benefiting transports broadly.
Oh, definitely. I mean that you can almost that's almost like the dollar and gold comparison. Oil goes down, transportations go up.
Mm
Reasons, and it'd be interesting to see how the airlines are comparing to that.
hmm. Oh,
You
good
know what I
point.
mean? And
Yeah, let's look at those. I can pull that up here because you're right. You would think that if oil's dropping, airlines should be doing better. They have been. Now, granted, we got that big throwback move here, Ray, but this looks interesting spot, doesn't it?
yeah, I mean it's still. I mean you got a it's a giant flag pattern,
Mm-hmm.
but it's holding good on that level of oh look at that big fat support level right there. Yeah.
Yeah, exactly. Let me draw. You're right on the money. I liked your flag call out. It's a little messy, because it was such a big move,
Yeah.
but it's still a flag, right? I mean, it is a deep pennant, like a deep throwback, and yet percentage wise on the rally rate, I'll bet that that's about a half give back. 50% give back. We always say that as it relates to trade to flags like this, that we build out the cloth portion at about 50%, right? The
Yeah.
flags fly at half mast.
Yeah.
Well, we
You want
have
to go right
held
on
the
it almost.
50% right there, haven't we?
Yep. Yep. And you got the flag pattern, and you got to bounce and run off that level of support of that flag. So there you go.
So, what about those back-to-back potential dojis, Ray? A pretty decent indication of, I don't know,
One of those
indecision, right?
one of those
Yeah.
make you want to go It's bad. But look where it
So,
is. Hey, but look where they are though. They're all right there
yeah,
at that level, all on support, just
yeah,
waiting.
yeah.
And
Rising 20-day,
yeah,
right? 50% retracement of the move right there as well. And you called it out. Horizontal support. If we draw it, we draw it with a nice fat magic marker as opposed to a very thin ballpoint pen, right?
there you go. And on the 50 retracement of the Fibonacci.
Yep. So same thing here can be seen, I believe, in your trucks. So here's a quick look at the trucking space within the transports. Moving to new highs, oil going lower, truckers moving higher. I guess, Ray, we're really moving things across country here in the trucks, aren't we? Because clearly this is an indication that there is a health to the economy side of things here.
Yeah, and also, hey, this is kind of interesting. So it looks like earlier classes you drew a divergence kind of in
Yeah.
the RSI, but look what's happened now with that big pull. That's undone.
Yep.
Kind of
It's
broke back
over.
through.
Now, what else are you going to say? That is as
Yeah.
confirmatory as you can get, is it not?
Yeah, and so now you got it's following along with its price pattern. It's closing higher and higher and higher. There you go.
Yeah. Look at this. I think it's a 10-day on this one, and that still might be too slow for some of you.
Yeah,
In terms of management. But here you are, you're up since May 13, so we're getting into about week 3 above the 10-day. We'll see if that validates or holds. But under the 10-day, some traders might choose to get a little defensive there. The other one, you may not recognize it, but the rail stocks are also in a similar scenario. And I think the thing that stood out to me on this chart, Ray, was being out of this channel. This is a really long channel that the rail stocks had been in, and then we got outside of it and have held it. This looks like,
yeah,
with the consolidation you've seen over the last, say, I guess 6 weeks, this kind of gives the impression that rail stocks have maybe made a significant shift. You don't get this type of price action too frequently, where you move to the upside of a big range channel like that and hold it for as long as it has been.
yeah. The kind of the cool thing is your green line, the top of that channel, which
Yeah.
is now the new bottom of the new channel. If you draw a channel to the top, you want to draw the one or move that bottom line up, activate it, and move it straight up above
I'm going to
and
duplicate it.
or duplicate. There you go.
Yeah.
There you go.
Now you got a new one.
There you go. That's interesting.
Yeah.
And
So there's consistency there, isn't there? Right?
yeah,
I mean,
I think
we learn
that's
these types of things with the trend, right? You get
that was
through a
kind of the thing
high.
I was noticing when you drew it. You had the consistent lower level that it really moved up on that around that February, March, April time frame. All
Yep.
right, that big, and then yeah, the big top right there, and now it's creating that whole new channel because of that. So
Yeah.
it's gained that strength and held it.
It's again, it falls under the trade what we see, not what we think
Yeah,
moniker, right? Because I
exactly.
would not have had any expectation for this type of a move, and yet off of the mid-March lows here, the rail stocks have done really, really well. I mean, just to where we are right now, up 17, almost 18%, which is a pretty healthy return for a and for a group like that. So.
Yeah.
All right, Ray, final couple of minutes here. I know we didn't get to nearly as much today. Part of that is due to my technical issues, for which I will apologize for all of you. I'm really sorry that was not that we went that way. But Ray, we kicked off the session today talking a little bit about what we've got coming up the rest of the week. And for those of you who are learning a little bit about options or wanting to learn more about it, we're extending the in-person event to the to the evenings here. We're doing a virtual event. So Ray, tell us a little bit about the virtual event that we've got on the calendar starting this afternoon.
Yeah, so Scott Durfee and myself will be, and Scott's frequent on here with Kevin a lot. You've seen him. He and I are going to teach the options workshop that we teach on day two of our live events over the next 4 days. So today we start basics on calls and puts, and I will do the Greek section of that. And then Tuesday will be cover calls. We'll do Wednesday selling puts, cash cure puts. And then Thursday will be vertical spreads, short vertical spreads, and then we'll have Q&A on Friday. But you got to sign up for it to get in there. And Kevin was showing you there. You go to your live events, and you go to coaching, and then you'll see that virtual workshop series in there, and sign up for it. Just hit that view more and sign up for it, and you'll get here's Scott and me 5 days this week.
That's right. 4 days, we do it. Basically, we take what we do on Saturday, spread it out a little bit, right? You get an hour and a half tonight, tomorrow, Wednesday, and Thursday. And then, Ray, you're doing a Q&A on Friday. Is that right?
That's correct. So you got to be signed in to do this, to be able to submit the questions, and then we'll consolidate as best we can those questions in and go through an hour of rapid fire answering the submitted questions to everybody out there to get a kind of an overview of how we did the whole week. It really comes out pretty well.
Excellent. So the reminder is, once more, that we're trying to meet you where you are. For those of you who love coming to the in-person events, we love doing them. We want to see you there too. But if you can't make it to one of those in-person events, well, then the virtual workshops become an excellent way for you to join in and participate. And Ray, you've done one of these recently as well. Was it earlier this month or was it late May?
Yeah, it was late May. We did a technical analysis class.
That's right.
And those are archived, by the way. That one's archived, and I think we're recording this one as well for the options. So yeah, they'll be recorded.
Yeah. So if by chance you were intrigued and maybe you want to see how the technical analysis one went, you can go to the map here or go back to the calendar, select month, flip back into May, and then when we do that, if you'll scroll down to the bottom here, because it was, I think, the end of the month of May. Let me see here.
When was it? No, I can't remember what it was.
It's been so long, hasn't it? I know it's in here. I think it was. No,
it wasn't in
Ray,
there. It was.
How can we not remember the dates we do all this stuff?
Oh,
I know why.
Because it's.
Okay, I'm hearing it was the end of the month of April, as it turns out here.
Yeah,
so
that's correct.
Yeah, it was ahead of our. There it is. Head of our National Investing Day. There it is. Technical analysis, virtual workshop, multiple days, right?
Yep.
And if you wanted, you can go back and check these out, everybody. And this is exactly how you could do that with us as well on the subsequent ones, the ones we're going to be seeing up available for you here starting this evening. So, yeah, get registered, everybody. We'd love to see you attend. You should not say that the registration for the virtual event is closed. That should be automatic. There shouldn't be a closure on that. We can handle quite a bit of virtual attendees, Ray.
Yeah, there's 23,000, I think, or so registered right now.
That's a big number, so they're going to be busy. To be busy. That's exactly why I think we would, get those questions submitted. Registration ensures that you can attend all 5 of the days. But yeah, that's exactly why. So, all right, everybody, we're going to be forced to wrap it up there. But again, thank you for attending. Thank you for joining us. Follow us on X. If we gave you any insights at all that were helpful today, hit that thumbs up button for us. We get this reviewed and into the archive shortly thereafter. But always appreciate hearing from all of you. Thanks for being here. Have a great Monday, everybody. We'll see you again real soon.
Great job, Kevin. Great job, man.